Hi, good afternoon, everyone. This is Mark with Redline Trading, and I just wanted to present to you market profile, which I think is an essential component of an essential part of every day trader's arsenal because of the really significant way that it increases trading precision. And I'm going to show you here just how important it is and define some of the terms. Now, approximately, you can see the histogram off to the right. And we don't use the histogram very much in trading, and we don't even project it at all. But between the value area high and the value area low, these two areas encompass approximately 66 and 2/3% of all volume at price. It's one standard deviation. And this is considered to be the fair value as investors see it for the financial instrument. In this particular case, it's crude oil. It could be for any. So it's fair value. Now, it's bounded on the upside by the value area high and to the low side by value area low. In between is the point of control, and this is where there's most volume at price. And this is where traders have traded crude and crossed more volume than any other particular price on the chart. Now, in order for crude to break out of the value area high or the value area low, it takes a lot of work. But before I even get to that, what I want to say is that not all market profiles are the same. We did a lot of forward testing on ours. It's not quite 66 and 2/3%. We've modified it to optimize it. And in addition, our market profile calculates intrabar so that it doesn't, so that at the close of a candle, it doesn't all of a sudden jump the value area high or value area low right in front of your price, which can turn a good trade into a bad trade as soon as it hits. So the value area high and the value area low act as significant areas of support and resistance. And you can see how price respects it right in here. It's very hard for price to break out between the value area high and the point of control. When it eventually does here, it breaks, retests the point of control, and gives you a tremendously good short. You can also look at this as an area of consolidation right at the point of control, right below the point of control, with the point of control acting as upside resistance, and you're most likely to get a breakout of this area of consolidation to the downside to catch a really, really nice winner. And that's the same thing that occurs here. Here's the break of the value area low, the retest, and then the break to the downside. So this gives you two tremendous trades. Break, retest, down, break, retest, down right off of these strong areas of support and resistance. This is what makes the value area high, point of control, and value area low so important. And what I've noted is that if you look at higher time frames, like we're trading an 8 range here on crude, if you look at the 13 range, you often find that the 50-period simple moving average is right juxtaposed to a value area high, value area low, or point of control area. I mean, it makes sense that a significant area of support and resistance on a higher time frame may be demonstrated on your trading chart via market profile. So you can see how important it is to respect market profile when you're day trading. You wait for the break, and then you look for the retest and the continuation. You look for this break. Now, you can never predict whether a market profile area is going to hold or break. You'll let it break, but then on the retest, you look for the continuation back into the trend. It's a very, very powerful way of trading. If you don't have this up and you're not looking at it, you can wind up taking trades right into support if you're trading to the downside, or right into upside resistance if you're trading to the upside. A very, very powerful day trading tool. Thank you very much, and I hope to see you all in the trading room.